Buy or sell Austria? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, if you look at the average here, minus 14-ish% from the 52-week low. So across the stock markets around the world, there are some troubling developments here. Okay, so let's go here to Austria. They are in Middle Europe, 30% from the low, minus 8.6-ish% pullback. So approaching, correction territory. So here are the weekly data points, all the data we have, and the time cycles have been relatively reliable. Rise, decline, rise, decline, rise, decline, rise, decline, and we are currently approaching the upper end of the rising phase. Here we peak a bit early and then we correct. Here we peak early, correct. Here we peak a bit later and then correct. The time cycles do suggest that there is a major pullback on the horizon. But that is no very big picture. When we zoom in a bit here, we are kind of hovering a bit in mid-air at the moment. So let's go to the daily data points. Then we do get an interesting situation. You do have the red 200-day moving average. That moving average, it can become very solid and reliable resistance, but it also has a pretty good history of offering support, like it did here, and also here momentarily offering some support. And when we get above it here, we do see a very nice and big rally. The problem now for the bulls is that the bears try. So 1, 2, 3, 4, 5, 6, 7 times we have tested this moving average without being able to pull off a big rally. Compare that to this. One rally and we just shoot off. We could compare the current situation a bit to this, okay? So here, 1, 2, 3, 4, and kind of a 5 times we test without being able to rally to new highs, and then we do unravel. So the situation here is very dangerous. It's not a disaster yet. It is still possible for the bulls to save it, but this is a do or die moment, given the history of this moving average. And because of what happened, back, also back here as well, this moving average has a lot of psychological importance. So yeah. Looking here at, these other indicators, you see here that on the weekly data points, the MACD has reached an extremely high level during this major time cycle rising phase. Yeah, we are seeing some cool down here across these indicators. So there's been, a nice short already. Let's look at, the daily data points. Yeah, because we have seen this correction, a lot of the indicators now are in the sort of neutral zone. But it's not like a peaceful neutral zone. This is like a zone where either the bulls could stage a rally, or the bears are going to stage a breakdown. So this is going to be epic. So the seasonality. Over the last 5 years, we do see that December and January are some of the strongest months. The last 10 years, yeah, December, January are decent. And then the last 20 years, so December is one of the strongest months. January is decent. February is one of the more mediocre months, but then March and April are very strong. So the seasonality here is a bit messy. So the bears would be very worried about being like massively short in March and April. But January and February are they open the door to the bears. Here is Finviz. They draw, the trend lines. So we do have some potential support below the 200-day moving average. but the 200-day moving average is watched a lot more than these trend lines. Okay, so let's go here and compare Austria with America. Looking at price earnings, America is 6% above Austria. Looking at the dividend, it is slightly better here in Austria, 1.63 versus 1.22% for America. But both of these dividends are mediocre. There's nothing like, it's not a very appealing dividend. So here is America, here is Austria, Verbund, Wienerberger, Raiffeisenbank, Lenzing. Here you can see the sector breakdown. Finance is very big, then followed by utilities. So utilities is interesting because it's viewed as, a more conservative sector. So it's interesting that it is number 2. In America, you do have, tech dominating, and then finance, and then health technology, and then retail. So the top sectors here in America are they are the kind of sectors that do well in a bull market, but that can have substantial problems in a bear market. Okay, so let's do a bit of a different correlation study for Austria. So first, we do the standard thing, look at it against the S&P 500, then we do have a 73% positive correlation. Then we have -4 with gold, and then 71% here with Bitcoin, and -45 here with the dollar index. Short term, 41% the SPY, 15% with gold, 66 with the Bitcoin, and 12% with the dollar index. So if I were to sum up my take here for Austria, okay, so I think, so the thing is that the bears are making progress as far as hitting the 200-day moving average. It is, however, also a level where the bulls have a tendency to find support, and it's a huge deal for them to find support. I will give the bulls the benefit of the doubt here with this 200-day moving average, but the bullish thesis is completely contingent on the bulls being able to stage a big rally here, because it's really close now to becoming a fantastic shorting opportunity.